Hello friends, CA Mohit Gupta this side, and you are watching me on channel Etax Helpline. Hope all of you are fine. So today on 1st of Feb 2021, we all know that finance budget for fiscal year 2021-22 has been pronounced by the Honorable Finance Minister. And there were several talks about this budget. Finance Ministry itself said this will be an historic budget in the last 100 years, despite the fact that India is independent for around 75 years, but still ministry was confident that this would be an historic budget. And if you have read the budget speech or you have listened the finance minister, you would be impressed with the overall budget. Maybe you must be looking for the changes which were specifically correlated with your core area. But let me tell you, overall, this is a very, very good budget. So in this live session, we will take up the queries also. We will take up your comments also, and we are going to discuss how how the budget was overall, major highlights of the budget, and then we will discuss the balance sheet of Government of India. As we all know that with the budget itself, government used to give economic survey. So we'll discuss the economic survey also. Government used to give their balance sheet of last year, used to give revised budget estimates for the ongoing current year, which is 2020-2021, and also used to give the budget estimates for the next year. So currently, as we all know, that the budget has been pronounced, and estimatedly the total budget amount is at record amount of 35 lakh crore. So last year it was 30 lakh crore, and that was also a surprise, and this year it is 35 lakh crore. And if you can see the screen, you will see that the budget size is 35 lakh crore, and on the left hand side you will see from where government will receive, and on the right hand side you will see where government is going to spend. So if you will see the left hand side, central government is expecting that gross tax revenue will be 22.717 lakh crore. Out of this, there would be customs tax, custom duty, GST, excise, income tax, corporation tax. This corporation tax is also income tax. That is that income tax paid by the corporates. And taxes on income is the taxes paid by the non-corporates. Then state share of taxes, then net tax receipts. So if you will see net tax receipts, gross tax receipts are around 22.17 lakh crore, but net tax receipts after paying of the states, which will left with the central government, will be 15.45 lakh crore. So this is the estimate which government is making. Then the capital receipts. Government have estimated a capital receipt of 17 lakhs, and you should not be surprised about this 17 lakhs. Reason why government is selling so much of stakes in PSUs. You must have listened that the IPO of LIC is also coming. Some other GICs also, in some other GICs also and PSUs also, government is selling its stake. So that, and in the previous few months, you must have also heard about the privatization of few networks of railway also. So that's why these are the capital receipts which government is targeting. So there are some debt receipts, there are market loans which are available with government, small saving and state provident funds, and then the capital receipts. So net capital receipts which government is targeting is around 16.95 lakh crore. So this is the amount which government is targeting from capital receipts. Net tax receipts is around 15.45 lakh crore. Despite the fact, I am of the personal opinion that this tax collection will be much higher than what government is estimating. Then non-tax revenue is also there, which is 2.43 lakh crore. Now, from where this non-tax revenue came? It came through dividend and profits, interest receipts, and the miscellaneous others. Now, this is the summation from where government will get the funds. Then where is government going to spend this amount? A empty amount of 35 lakh crore, where government is going to spend this amount. So there is a transfer, establishment, and other expenditure, which is around 20.5 lakh crore. Scheme expenditure, which has been the various schemes launched by government, are 14.33 lakh crore. Out of these schemes, center sector schemes are 10.52. Economic services are there, general services are there, subsidies are there, social services are there, fertilizers are there, food services are there. So these are the schemes, sponsored schemes by the government. Now come to the transfer establishments. Other central expenditure is there, investment interest payment is there, the interest payment made by the government on the borrowings taken by the government. Then the establishment expenditure, salaries, payment of salaries by central government, that is around 2.59 lakh crore. Then the transfer to the states, others, and financial commission transfers. So please consider this chart as a balance sheet, as a projected balance sheet of the government, that from where government is going to receive and where government is going to spend this. Let me tell you one thing very frankly, we will have a separate session on the direct tax proposals at 6 p.m. and then in continuance we will have a session on indirect tax proposal also. But in this session we are going to discuss about the budget as a economics, as a finance, as a layman, and also we are going to this is the first time we are going to discuss the balance sheet of the government. So this is the budget profile given by the government. Now let's see the highlights, budget highlights. So finance minister have given 6 parameters, 6 pillars. One is the health and well-being. Second is the physical and financial capital and infrastructure. Third one is inclusive development for aspirational India. Fourth is reinvigorating human capital. Fifth one is innovation and R&D. This is the first time government have considered innovation and research and development as a main tool for the budgeting. Then the minimum government and maximum governance. Here government is trying to say that we are making the things faceless, we are making the things paperless, we want to make the things automated. So we will discuss all these pillars. So first of all, a record expenditure has been announced in health sector. So last year health sector budget was 94,000 crore. This year it is 2.15 lakh crore. So you can clearly see there is a almost more than double budget has been allocated to the health sector, and the main reason is COVID. 35,000 crore has been allocated to the COVID vaccine. 1.10 lakh crore has been given to the railway, and this, let me tell you, this is the highest amount given by the government for the railways. So this is the highest amount allocated by the government to the railway, that is 1.1 lakh crore. Earlier railway, we had a railway budget before 2015, we had a separate rail budget, we all know, and that has always been used as a tool of political negotiation and for the politics only, because the railway budget was not such a higher budget, but it was coming from the historic times, pre-independence era. That's why we had a separate rail budget. But now that rail budget has been consolidated and added to the main union budget. There is a assurance of completion of 11,000 km of national highway infrastructure in the current in the coming fiscal year. And the thing which finance minister maybe skipped is that there is a agri-infra cess has been imposed on the petrol and diesels. On petrol, the amount is 2.5 rupees per liter, and on diesel it is rupees 4 per diesel. So you can clearly see the rates of petrol and diesel are going to increase from the tomorrow only. Now comes to the sectoral highlights. So first one is health and sanitation. In the health and sanitation, a new scheme has been introduced. This new scheme is the summation of all the old schemes. It's not a separate scheme, but few old schemes have been merged to the new scheme, that is PM Atmanirbhar Swasthya Bharat Yojana. So a app will be launched, and that has been developed for the primary, secondary, and tertiary healthcare. Then Mission Poshan 2.0 to improve nutritional outcomes across 112 aspirational districts. Then operationalization of 17 new public health units at point of entry. Then modernization of existing health units at 32 airports, 15 seaports, and land ports. So you can clearly see that government is considering this pandemic and any other pandemic as an alarm, and they want to set up health units at all the entry points in India. Those entry points are airports, seaports, and land ports. So everywhere government is planning to station a health center, a health unit where every person coming to India can be examined thoroughly. Then the Jal Jeevan Mission Urban aimed at better water supply nationwide, and huge amount has been given for the water, better water supply. Then strengthening of urban Swachh Bharat mission. Now comes to the education. Now this is very surprisingly, this is much more has been expected in this. Reason why new health policy has been announced, and a new education policy have been announced, and with that new education policy I was expecting that much more amount and much more things can be declared for the education sector, but still 100 new Sainik schools to be set up, 750 Eklavya schools to be set up in the tribal areas, and a central university to be set up in Ladakh. This you can clearly consider as a political move. For the setting up a central university in Ladakh is totally because government during this whole budget you must have seen that government have tried to politicize certain events, certain schemes, specifically allocated to Tamil Nadu, specifically allocated to West Bengal also. So government wants to groom Leh and Ladakh, and that's why government is trying to invest there and wants to highlight the Ladakh region. Now comes to the infrastructure, and this vehicle scrap policy have already been approved by the Transportation Ministry. Shri Nitin Gadkari ji have talked a lot about vehicle scrap policy and also the green tax. So this vehicle scrap policy have now been adopted. It is adopted, you can say, on voluntary basis. Here, every personal vehicle having life more than 20 years need to be scrapped, and every commercial vehicle having life more than 15 years to be scrapped. Government have estimated that around 1 crore vehicles will be removed from the roads, and these 1 crore vehicles were doing huge pollution because their life was much older, and they were consuming more fuel, and they were incurring more carbon emission and more pollution. And since these vehicles will be scrapped, so definitely these vehicle owners are going to purchase new vehicles. So government is expecting that these new vehicle owners, this sale of new vehicle will boost the automobile sector also. So when this policy is going to be implemented, that is after 1st of April 2022. So there is a full 1 year with the ministry to come up with the rules and the guidelines that how this process is going to come. But let me tell you one thing very frankly, government is targeting these vehicles, and how they are targeting, they have come up with high security number plates along with the sticker, and on the sticker the date of registration is mentioned. So, and the vehicles which are not going to register themselves because they are not fit for the registration, definitely they are going to be scrapped. What government is going to do, they will catch those vehicles on the road and then they are going to be dumped. Now come to the highway and roadworks construction that has been announced in Kerala, Tamil Nadu, West Bengal and Assam. I personally feel that that is a total political move. Why government is specifically highlighting these 4 states when they have clearly told that we are going to make national highways for 11,000 crore in the coming fiscal year. National asset monetizing pipeline launched for the monitoring asset monetization process. This is a very, very welcome move, because through this a normal common man can track the government assets, and they can check their financials. So this I really consider a very transparent move. Then government have said that they are planning national rail plan to bring a future ready railway system by 2030. I don't know how rail ministry is going to come up with this. Then government is claiming 100% electrification of railway, specifically broad gauge by 2023. Government is heading towards that mission. Let's see if they can achieve it. Then metro services have been announced in 27 cities, plus additional allocation for Kochi, Chennai, Bengaluru, Nasik, Nagpur. Then national hydrogen mission to be launched to generate hydrogen from green power sources. Recycling capacity of ports to be doubled by 2024. Gas pipeline projects to be set up in J&K. Pradhan Mantri Ujjwala Yojana to be extended to cover 1 crore more beneficiaries. So these all are welcome moves, and let's see how these things which have been written on the paper are also going to be converted into reality by the government in next coming years. Now comes to economic and finance. Now this was the point of debate. In the last 6 months, every expert was saying that government is in huge deficit. But government was nowhere claiming that there is a situation of recession in India. They were every time they have said COVID is the issue and global recession is the issue. But economic survey have clearly told that Indian economy is in trouble stage. Now let's see that if you will see the GDP for financial year 2019-20, if you will read the economic survey, you will find that GDP for financial year 1920 was 146 lakh crore, and revised estimate of government for financial year 2021 is 134 lakh crore. So you can clearly see there is a dip, and that dip have been told by the government that is 9.5%, that have been accepted. But in the next fiscal year, government is expecting that GDP is going to be 149 lakh crore. Now here there is a check. If government says that my denominator is 134, then they can clearly show that there is a growth in GDP by 12-13%. But let me tell you one thing very frankly, you cannot consider COVID denominator of GDP as a valid denominator. I believe financial year 1920 GDP numbers should be considered as a benchmark for the comparison of 21-22 numbers. You need to skip financial year 2021 if you want to have real comparison, because in India GDP is the denominator for every number, for every economy number, and GDP have clearly dipped. So that's why I personally feel that Indian economy is going to be Indian GDP is going to be increased in financial year 25, fiscal year 21-22 by 2% only. However, if you will consider financial year 2021 as a denominator, then definitely numbers are going to be changed, which I believe should not be considered. Government have confessed, I will use the word confessed, that the fiscal deficit stands at 9.5% of the GDP. Their estimate for the next year is 6.8%, which I believe is totally not possible if you will go with my formula. That is, I don't know how government is going to calculate that, how they are going to formalize it, but I believe 2021 denominator should be skipped. Then states are allowed to borrow 4% of GSDP this year. Then a big change in the security market. A single and rationalized security market code to be set up by consolidating provisions of SEBI Act 1992, Depositories Act 1996, Securities Contractions Regulation 1956, and Government Securitization Act 2007. I believe this was need of an hour. This need to be done few years back, but still, if government can do this right now, that will help government in analyzing the securities. Also, you must have clearly seen that how share market have reacted today very positively, and in the last 10 years, this is just a couple of years, and in any budget it never happened that market have increased by more than 2000 points. You can clearly see how market have adopted the budget, and the only reason was that no additional taxes, no cuts have been done on the market. Only and only things have been announced for the public welfare. Now, from where government is going to get the money? They have increased the FDI in insurance sector from 49% to 74%. They are going to sell stake in LIC. IPO is coming, that is going to be listed. And asset restructuring company will set up to take up of stress loans that have also been announced by the government. Proposals to decriminalize LLP Act. This was a long pending demand. Hope that will be done by the government in coming year with the amendment in LLP Act. 2 PSUs bank and 1 general insurance firm to be disinvested. Let me tell you, these PSUs bank is IDBI and Air India, which government is going to disinvest. For Air India, government is trying from so many years, but I don't know how government is going forward with IDBI. Reason why IDBI bank have already won the case in Supreme Court, and government very smartly, what government did, government uh, makes LIC as the holding company of IDBI bank, and now they are selling their stake in LIC, making it PSU, and now openly they are against it, they are going to disinvest in IDBI bank. This will increase the litigation for the government. Independent gas transportation system operator to be set up, because what government is doing, government wants to make the gas pipeline. Government wants to reduce LPG consumption and want to increase the pipeline gases. So the cylinder consumption need to be reduced and pipeline gas need to be increased, specifically in the urban and metro areas. Then minimum loan size eligible for debt recovery under SAR FAESI Act 2002 to be reduced from 50 lakh to 20 lakh for NBFC with minimum asset size of 100 crore. Then the definition of small companies has been changed, revised. This was a long pending demand. So companies with paid up capital up to 2 crore will be considered as small and medium companies, SME, and turnover up to 20 crore will be considered as small and medium companies. Now, why this happened and how this is going to help the companies? Because once you are in small and medium companies, you will get so many benefits. What kind of benefits you get? You get benefits from so many compliance mentioned in the Companies Act, and also get so many other benefits. Also, one more positive change for the companies, that government have allowed for the incorporation of OPCs even for the NRI, even for the non-residents also. Such companies will be allowed to grow without any restriction on paid up capital and turnover, and to convert into any other form of company at any time. Let me tell you, earlier there was a ceiling that in OPC you cannot do the turnover more than 2 crores. Now that ceiling has been removed. So I personally believe that this is a very good move for the OPCs, that they need not require to convert themselves into private limited only and only because their turnover or capital is increasing. So that is a very positive move. And also this OPC incorporation has been allowed for the non-residents also. We'll see the rules, how MCA are going to frame the rules, what conditions they are going to incorporate on that particular provision, but that also is a very positive move for the non-resident investors. So this ultimately increase the FDI in India, and also small investors can enter the Indian market through OPC and private limited model. Now comes to the agriculture sector. This is a very hot topic in last couple of months. You must have seen agri reforms and then agitation against the agri reforms, and everything has been happened, including politics and shame for the country on Red Fort on 26th of Jan. And all the politicians are seamlessly blaming each other, but nobody is accepting that shame should not be happened again. And how I don't know how India will get their ethics back. specifically on these types of incidents, but let's focus on agriculture. So government have clearly shown that the agri amendments done by them are positive amendments. They are agree to bend down against the farmers protest and need to take their suggestions, but these laws still exist even after 1.5 years, the way government have declared in the last few weeks. Now, if we are talking about agriculture infrastructure fund to be made available to APMCs for augment their infrastructure. 1,000 more mandis to be integrated into the e-NAM marketplace. Let me tell you, this is one of the reasons why these agri protests are going on, specifically in Punjab and Haryana, because here the mandis and RTs are ruling the agriculture sector, and if government is going to have more e-NAM mandis, then these agri protests are going to be more severe. 5 major fish hubs, including Chennai, Kochi, and Pardeep, to be developed. A multi-purpose seaweed park to be established in Tamil Nadu. So this Tamil Nadu and West Bengal, I have no issues in naming them by the finance minister, but why these have been highlighted? Because of the political elections which are going to be having next 6 months in Tamil Nadu as well as in West Bengal. Now come to the employment. Let me tell you, as per me, that either finance minister is not aware about the economic situations, or finance minister is only reading the books and not having any practical exposure. Because we must have heard certain terminologies in past few months. In cricket, you must have heard about character, that people have shown character, cricketer have shown character, boys have shown character. Earlier, before that, there was no character in the cricketer. They have never shown their character. Same alike, now the finance minister have come up with the new word V, that there will be a V development of the Indian economy. Now let me just explain you what is that V. That V means that the way economy have depth from 100 to 0, the economy is going to lift again from 0 to 100, and ultimately there shall be no loss to any person. Let me tell you one thing very frankly, no person even in his dreams can perfectly think about V, recovery of the economy. Let me just give you an example and you will appreciate that before COVID, if 100 shops were there doing business with 1,000 labor, does finance minister means that those 100 shops are going to reopen again and will work with the same pace and with same business and with same labor of 1,000 capacity? This is near to impossible, let me tell you, in the present situation. Even government's economic survey confesses that there will be an increase in unemployment in the near future. Government's economic survey confesses that there will be an increase in unemployment, and here government is claiming that there will be a V development. I don't know how these jumlas, from where these jumlas come and how they used to advertise them. A portal to be, let's come to the employment. A portal to be launched to maintain information on gig works and construction workers. Now, I don't know for which benefit government is going to make that platform. Social security to be extended to gig and platform workers. Marginal capital required for loans via stand-up India scheme reduced from 25% to 15% for SCs, STs, and women. Now, I don't know. From on one side, government is claiming about Ek Bharat, and on the other side, they themselves discriminate people in terms of caste, in terms of religion, even on their budget, even on their official document and record. I don't know how we are going to remove this barrier of caste and religion in our country, because politicians uses them only for their vote banks. Now comes to the taxation. Now, finance minister have, if you think that finance minister have taken the minimum time on the taxation part, let me tell you, it is not so small. There are plenty amendments in taxation. There are so many anti-taxpayers amendment in GST and so many amendments in income tax also, which maybe currently are not on the face of the budget speech, but if you will read the Finance Act, you will find so many anti-taxpayer amendments there. So if you think that you have get anything, if you have not get anything directly and you have not lose anything directly, let me tell you, you have lose a lot of things directly through direct tax and indirect tax proposals in the budget, which we are going to take up in the separate presentation at 6 p.m. So in taxation, so government came up with this situation that for above 75 years of age, no ITR is required to file if you have interest income and pension income. Now government is considering that every pensioner have only one bank account with one bank. Otherwise, how is it possible if a person is having 5 bank accounts? Then how these 5 different banks are going to deduct my tax equivalent to self-assessment tax so that I am not required to file the income tax return? I don't know how government is going to make this situation possible. But let me tell you, government have taken a just ideal situation that a person is having only one bank account with one branch, and they are only having my receipts, all the receipts of pension and interest, and they can compromise my ITR with the full deduction of taxes. That is the presumption in the mind of the government. Otherwise, if I am having multiple bank accounts in different banks, I don't know how they are going to tackle this situation. Then they are saying that for the reopening window and for the income escaping assessment cases, limitation period of 6 years is going to reduce to 3 years. That is a very welcome step. And for more than 50 lakhs cases, 10 years, that is okay. Because for the heavy tax cases, government can cap it at 10 years, but for the small taxpayers, that is okay, keep it at 3 years. Affordable housing projects get 1 more year. I believe this need to be given straight away for the 2 years, because in the next year, government is that industry cannot revive. So at least 2 years need to be given in a straight away manner so that industry can have a boost. But let me tell you, this increased every year for 1 year only. Then compliance burden for small trusts whose annual receipts does not exceed 5 crore to be eased. So earlier this limit was of 1 crore. Now this has been increased to 5 crore. Now duty of copper scrap reduced to 2.5%. That is a welcome move. Custom duty on gold and silver to be rationalized. This is also a welcome move. Then duty on naphtha reduced by 2.5%. That is also a welcome move. Duty on solar inverter raised from 5% to 20% and solar lanterns from 5 to 15. This is why government wants to increase make in India, that they want to have in-house solar manufacturing system. That's why they are discouraging the imports. Then all nylon products charged with 5% custom duty. Tunnel boring machines to attract custom duty of 7%, that has been increased. Custom duty on cotton raised from 0 to 10%, that is a negative move. Then the agriculture infrastructure and development cess proposed on certain items including urea, apples, crude soybean and sunflower oil. So all these amounts are going to be expensive, let me tell you, because agriculture infrastructure and development cess has been imposed on them on the import of these items, and definitely these items are going to be expensive. So this is all about the highlights of union budget. Now let's go to the balance sheet of the government. This budget at a glance we have seen. Now let's see the balance sheet. How to read the balance sheet of the government. Now this is the first government which has been the first document of the government, annual financial statement. So for just like for any private limited company or any business association, this balance sheet is going to be similar like that. So annual financial statement of central government for the year 2021-22. So what this annual financial statement covers? This covers the actuals of financial year 1920. You can see the actuals of financial year 1920. Original budget estimates of 2021, which were announced in Feb 2020, and revised estimates given for the current financial year for the remaining 2 months. This is that amount, and at the end budget estimates for financial year 21-22. So this is the revenue account receipt of the government. So this is from where government have receipts. First one is the tax revenue. This is the actual. This is the budgeted. This is the revised budget, and this is the proposed budget which government is planning. So these are the tax revenues, various different type of tax government have collected. Then this is the gross tax revenue which government have collected. This much of amount has been given to the share, and you can see clearly see the central government tax revenue share is 13,60,000 crore for 1920. 16,38,000 crore was estimated, but this has been reduced to 13,50,000 crore. And for the next year, next financial year, government is planning for 15,51,000 crore. If you will see the difference from 1920 to 21-22, there is a clear increase of 20%. So this is what government is expecting. Now come to non-tax revenue. So this non-tax revenue includes fiscal services, interest income, dividend income, and other receipts. Defense receipts are also there. Economic services receipts are also there. So there are so many receipts. Tourism receipts are also there. So from all these receipts, this is what government is expecting. The total non-tax revenue is 5 lakh crore was in 1920, 5,88,000 crore was in 1920, and this year government is expecting 4.45 lakh crore, and the next year is 5,54,000 crore. So you can clearly see in 1920 it was higher, and in 21-22 it is lesser than 1920. So you can clearly see that from the tax portion government is going to get revenue, but from non-tax portion government is going to not get much of the revenue. Then you have to see the expenditure portion of the government. So this is the revenue account of disbursement. So that is the account from where government have received, and this is the account where government is going to spend. So this is the expenditure of the government: general services, tax collection services, other fiscal services, administrative expenses, pension expenses, social services expenses. So this is the sectoral economic services. Then this is the sectoral wise expenditure of the government. You can clearly see. You can read it in detail, and if you have any query, you can let me know. So that this is the total revenue disbursements of the government, and this revenue disbursement is definitely equal to the revenue receipts, because you cannot spend more than what you have received. Now here you can see the capital account receipts of the government, and here is the capital account expenditure of the government. Now let's come to the sectoral wise. Now let's come to the sectoral wise comparison. So this is the second booklet of the government budget, expenditure budget 2021-22. So in this you can clearly see that for the different ministries how government have predicted. So just see for the Ministry of Agriculture and Farmer Welfare, this is the budget estimate for financial year 2021. This is the revenue, this is the capital, and this is the total budget estimate. So ministry wise allocation is there for the future year budget. Now here is the comparison. Here is the comparison of center's expenditure. Here you can see the actual expenditure, budget, revised budget, and this is the next year budget which has been announced. So center's expenditure on secretariat is there. Central schemes are there. Now here are the schemes. If you will see Rashtriya Krishi Vikas Yojana, if you will see on Rashtriya Krishi Vikas Yojana in 1920 government have spent 3,000 crores. For current year government have spent 2,500 crores, and for the next year government have estimated 3,700 crores. So this is the comparison. So you can see the comparison. You can read the whole schemes of the government here. What kind of schemes government have announced? You can see the comparison of 3 years, 1920 actual, 2021 original budget and the revised budget, and then the 21-22 budget which has been pronounced by the government. So you can clearly see scheme wise, sector wise, department wise comparison of the expenditure of the government. So this is what government used to you can say declare that what we have announced in last year and what we have delivered, and for the deliberation you can see the implementation of budget announcements. So these are the implementations of budget announcement for the last year's speech. If you will see, this is the index for the budget 2021, and here you can see the comparison. So this was the pronouncement at para 4, and this is the status of implementation. So what government have pronounced and how much level it has been implemented, the comparison has been there. So from here you can analyze for your sector, for your department, for your interest, that what government have pronounced and how much they have delivered. If you will clearly find that government in budget used to give two type of visions. One is the small short term vision, which is for 1 year, and one is the long term vision, which is for the larger period, maybe 2 years, 5 years, or 10 years. So if you will see any scheme which has been announced by the government, you will see the implementation status of that scheme. In the current year, since due to COVID-19, there was a lockdown, there was a slowness in the economy also. You cannot see the actual comparison of budget versus deliverable, but this is the benchmark how you can read a budget, how you can study a budget, and how you can understand what government promises and what government delivers. So friends, with this we conclude our today's presentation on economic survey and overall budget and balance sheet of the government. Let me let me tell you, I personally give 8 out of 10 ratings to the government for such a great budget. But again, I'm saying this looks very excellent on the paper, but how government is going to implement it, that is the challenge with the government. If government can, I will say, deliver even 50% of what they have announced, then definitely Indian economy will be on the right track. But personally, I'm not expecting that even government is going to cover 50% in the next year, because there are so many challenges with the government, and the biggest challenge is disinvestment, getting the funds. I will not be surprised to see so many litigations due to the selling of PSUs and banks and on these disinvestments, and these will definitely be an obstacle for the government in getting the funds. So friends, with this we conclude this video. If you have any query, you can comment.